Hello everyone, welcome back to the channel, your number one source for income-oriented investing. So a couple of days ago, I came out with the video, the great S&P 500 core positions to buy and hold forever. There's the video right now. So in today's video, I'm going to do the same thing, but for the NASDAQ 100. You guys know that these are my two favorite indexes of all time. I'm actually preferring the NASDAQ 100 even more. If you do a total return comparison versus the S&P 500, it's outperforming the S&P 500. It's about 18% average annual return versus the 14% in the last 10 years of the S&P 500. It's a little bit more, well, definitely more concentrated in technology stocks. So sometimes it's called the technology index, although it's about 51% technology, whereas the S&P is about 34% technology. So just like in the last video, I'm going to go through all the US listed, this is for my American friends or Canadians that invest in US listed funds in the RRSP, of course, to avoid those withholding taxes. But this is for my American friends primarily. I'm going to go over all the NASDAQ 100, just like I did in the previous video, NASDAQ 100 covered call ETFs. We'll go through all of them, and the goal of the video is really to try to differentiate between them. I'll give you my opinion on which I feel are the best ones right now. That could change, and I'll give you my opinion on the ones I wouldn't hold anymore or that have antiquated strategies. Starting with the steam engine of the covered call strategy ETFs, QYLD, right? Gets a lot of publicity. It gets thrown around all the time because it gets compared to the Qs or other covered call strategy. This is basically the steam engine of covered call strategies. They're doing covered calls on the whole thing. They're giving up all the upside, and they only give out a portion of the income out to investors, right? They limit the distributions as well. So this is probably my least favorite one. Of course, maybe many of you still have it in your portfolio because you don't keep up with the covered call landscape, which has exploded, and there's many more. But we still have to give homage to QYLD because it's the OG, it's the original one. It came out in what, 2013, I believe. Yeah, 2013. It still has 8.22 billion in assets, but in terms of covered call strategy, I believe it's the worst by far. You're giving up all the upside. In short, it's kind of like shorting the NASDAQ 100. Okay, and they have a distribution policy where, because they're giving up all the upside, by the way, they're only limiting the distribution to 1% max. So, if you go to distributions, you could actually see what is the premiums they're making every month: 2.4, 1.96, 1.99. So they could easily make, this fund basically generates easily 24 to 30% yield, but they're only giving out 1% a month. If they would give out everything, they probably would have had to do a couple of reverse splits by now. But I don't want to get into that. But either way, this is the most antiquated one. I think it has no place in a portfolio if you're buying and holding something forever. If you're bullish on the NASDAQ 100, this is the opposite. This is if you're bearish, okay? Because you're giving up all the upside. They do have QYLG, which is basically, they're doing the same exact thing as QYLD, but they're only doing it on 50% of the portfolio. So this one, obviously, you're giving up 50% of the upside, but the distribution policy is still the same. They're not giving out everything to you. They're only giving out half. They're only, instead of 1%, it's 0.5%. So the problem that I have with QYLG is that the yield is very low, and there's much better strategies out there. Now, there's a couple of ETFs that are not exactly the NASDAQ 100, but I'm going to include them anyway. The first one is QDVO or QDVO from Amplify ETFs. This one has been kicking ass lately in terms of total returns. It's fairly recent, came out near the third quarter of 2024. This is not exactly the NASDAQ 100 index. They're choosing 20 to 40 stocks. This is kind of like Devo for the S&P. This is on the NASDAQ version. So instead of doing all NASDAQ 100 or just doing the index and index calls, they're choosing 20 to 40 stocks. So think of this like a concentrated NASDAQ 100, if you will. But if you look at the top 10 holdings, it's basically the NASDAQ or concentrated NASDAQ. They have monthly distributions, which vary greatly, but your yield is typically around the 12% mark. JEPQ is also another one that's not exactly the NASDAQ 100. This is the NASDAQ version of JEPI, if you will, JEPQ. So this focuses obviously on NASDAQ equity, like the name says, but it's not exactly the NASDAQ 100. I guess we should go through fees as well, right? So QYLD is 0.60. I think QYLG is the same thing. Oh no, even less, 0.35, which absolutely makes no sense. Why is QYLG 0.35 when QYLD is just the same strategy but covering all the portfolio? Anyway, QDVO 0.55, not bad, not bad. JEPQ is 0.35. So this is one of the lower ones here. So the yield for JEPQ, it's a monthly distribution, and the yield is typically between the 9 to 11% range. It varies every single month, so you have to expect varying distributions with this one. Same thing with QDVO. Very, very, very popular. This is probably the one with the biggest AUM, 30 billion. Yeah, so 30 billion by far. Very, very, very popular. The next ones are going to be officially or authentically the NASDAQ 100. So these are NASDAQ 100, pure NASDAQ 100. The first one is what I like to consider the benchmark or the classic one that's really been launched to compete with JEPQ. The only difference is that it's actually the NASDAQ 100. So the yield on this one is typically near the 10% mark. Very, very consistent monthly distributions. Okay, it's already at 1.6 billion, so it's getting more popular. The fee's a bit less, I believe. The net expense ratio here is 29 basis points. So this is the one I always use, guys, when I do a comparison for a NASDAQ 100 cover call ETF. I always compare it to GPIQ. This is kind of like my bottom line basic option that I look at as the benchmark. So the distributions could vary, but they're fairly consistent, as you could see here. Another one I use sometimes as a benchmark also is, I consider a classic strategy, GPIQ and QQQI from NEO. So this one has about 14.5% yield. This is basically the same strategy as SPY-I, which we covered, which is the S&P 500 one from NEOS, which we covered in the previous video. 68 basis points. They're just doing it on a NASDAQ. Very, very popular. It's actually doing very well. Already at 4.6 billion. Very, very, very consistent distributions as well. They could vary a little bit, but you're typically getting the 14 to 14.5 range mark. They do have a version that I don't like called QQQH, which has a little bit of hedging. So they're taking some of that yield to basically lower your risk even further, to hedge a little bit in case the NASDAQ 100 goes south. So you're going to have less yield on that one, a little bit more protection, downside protection. But if you just do the total return comparison, QQQI is much, much higher. So I personally, if you like the NEOS products, I would always go with QQQI. Now, Invesco, the guys who actually manage the Qs, the QQQ index, QQQM ETF, actually have their own version of a covered call ETF. The yield is typically around the 10% mark here. You see the 12-month average is slightly under that. So the distributions do vary monthly, but they're typically, fairly close. What is the fee on this one? It should be pretty low. I'm assuming it should be. Here it is, 29 basis points. Okay, so it's one of the lower ones like GPIQ, but the performance is not that impressive. We'll see some performance numbers in a second, guys. Last but not least, which I consider under the more classic, or it's the NASDAQ 100 or the non-zero DTE ones, is Granite Shares Yield Boost QQQ ETF. TQQY is the stock symbol. This has a very, very high yield. The management fee is much higher. It's 1.07. Weekly distributions, and this is very unique. They're doing actually put options, not call options, on leveraged QQQ, 3x leveraged QQQ daily ETF. So it's very interesting. The performance lately has been really good. Since inception, it's been okay. It's a bit lagging, so maybe they're getting better at managing it. But this is definitely one to keep our eye on for sure. So if we do the total return comparisons, for example, if we do JEPQ versus GPIQ, QQQI, QQA, and TQQY, for all of them, we have at least 1 year of data, except for TQQY. But you could see in the last 3 months, it's actually the winner. So this is why I say we got to keep our close eye on this one. But after a year, which we have more data. GPIQ and QQQI are the clear winners in terms of total returns here. But, so this one here and GPIQ. So the first thing I'll tell you and you'll notice is that it seems like just having the NASDAQ 100 instead of stock picking like JEPQ does is better. But that rule or that general rule of thumb goes out the window when we consider QDVO, because if we do add QDVO into the mix, you see that it's performed really well after 1 year. So I think this is accurate here, 25. Yeah, it is. I annualized 25% here, so it looks like it is accurate. So QDVO has been doing really well. So total return wise, so far the big winner seems to be QDVO. And I also added QYLD and QYLG in the mix just so you could see how antiquated and how terrible QYLD is performing. Of course, if the NASDAQ goes up, which it has, QYLD is going to perform the worst because they're giving up all the upsides. Absolutely terrible strategy. QYLG better, but you see that it still can't catch just the basic GPIQ at all, right? Or QQQI in that case. So there you have it, everyone, for the classic ones. The ones that really stand out, and we'll go through them all at the end. I'll give you my opinion on every single one of them and which investor they're designed for. But in terms of more classic basic strategies, I think GPIQ and QQQI are definitely ones to consider, or the top ones in this category. I think QDVO is definitely one to keep your eye on as well. It's performing really good. It's not exactly the NASDAQ 100. Think of it like stock picking or a concentrated version. They obviously seem to be doing a much better job than JEPQ is doing. And this one here, it's a little bit more fancy, a little bit more exotic, but got to keep our eye on it because lately it's been doing really well. Will it continue doing well? I don't know. I would love to see. We're going to have to wait to see at least until there's 1 year of data. Moving on now. What was this? QDVO versus GPIQ. Yeah, I just wanted to show you how really good QDVO has been doing, for example, versus GPIQ. Again, I always use GPIQ as kind of like my benchmark here. Moving on to the 0 DTE NASDAQ 100 cover call ETF. So these are the ETFs that use 0 DTE or 1 day cover call strategies. So they typically have higher yield. They're maybe a little bit harder to understand, but they're basically just writing calls every single day on the NASDAQ 100. That's basically what it means, right? 0 DTE, 0 days to expiry. So the first one is QDTE from Roundhill. This one has a very high yield, typically around the 30% mark, a weekly distribution. The yield will vary. The monthly distributions will vary. You have a whole history here, so you could see more or less what you're going to get. But let's just say it's between 25 and 35% yield, I would say, on average. QQQT from Defiance. This one has what makes this one unique. It's monthly distributions. It uses 0 DTE. They actually do a spread, covered call spread, a daily covered call spread strategy on the NASDAQ 100. What makes this one a bit unique is that the yield is typically always near the 20% because they're targeting an annual yield of approximately 20%. There's IQQQ from ProShares, so they also have an S&P 500. IQQQ is their NASDAQ one. So this one, although it's one of the lower fees when it comes to the 0 DTE, the distributions is rather low and they vary a lot. So this one you could see here, the 12-month average is 13%. You have QDTY from YieldMax. Very similar strategy to QDTE, okay? Very similar strategy. Similar yield, typically you see 21 right now based on the latest weekly distribution as well, which varies greatly. You see the last week one here is lower. Remember, it varies based on volatility. If volatility is lower, the distribution is lower. So it makes sense that both the YieldMax one and the QDTE one in the last week here has been lower than the previous week. You got to expect varying distributions because they're based on volatility. Last but not least, this is the new entrance to the 0 DTE space, TDAQ. So TappAlpha has a very successful S&P 500 0 DTE cover call ETF, T-SPY. So TDAQ is the NASDAQ 100 equivalent, right? Same fee, by the way. It's already at 5 million almost, which is really great. The first distribution has not even been declared yet, but my guess would be near the 16% range, right? If they could do a consistent 14% range on the S&P, well, this one they could probably deliver 16. Now, if we do the total return comparisons now between these 0 DTE ones, where is it? Performance. Here we go. We have data for, we don't obviously have no data for TDAQ because it's new. QDTY has not been out for a year, but the ones that have been out for a year, QDTE is the front runner. IQQQ is doing okay, but QDTE is still holding very, very, very strong. I think the main competition is going to be between QDT and QDAQ and TDAQ. But hey, QDTY, no slouch. You could see we have 3 months of data, and it's very, very, very close to QDTE here. So let's go through all of them one by one. I'm going to give you my opinion, what I hold it, and for which investor it's designed for as well. So QYLD, I don't see any reason to hold it anymore. It's antiquated. It's a steam engine. You hold this one. Maybe tactically, if you think the NASDAQ 100 is never going to go up again, or you want to hold it for a brief period of time because you think the NASDAQ is going to go down, maybe you could buy this one. But this one, as a long-term buy and hold investor, if you're bullish, I don't see any reason. You're just going to underperform greatly. QYLG is much better, but I think because of the distribution policy, which I don't like, they don't give out everything to you, the yield is extremely low. Plus it underperforms even GPIQ. So to me, it's like, what's the point? And GPIQ even has a lower fee. Now, QDVO and JEPQ. So QDVO, performance-wise, it's done really, really, really well. If you're really a income total return investor, you're happy with 12% yield, this could be a really, really solid choice. Just remember, there's stock picking inside, so it's not exactly the NASDAQ 100. It's kind of a concentrated version. But Amplify ETFs is very reputable, so this is definitely one I would consider as a core buy and hold position long term. If you're living off of it as well, it's got that nice 12% yield, which is not too high. Magical range between for. Okay, so if you're an income investor and you're planning to live off the income, spend all the money, the yield, you need to manage your distribution properly, right? So if you don't want to do any distribution management, you want to invest a certain amount, you want that amount to stay relatively the same over time, well, you have to choose ETFs that meet that criteria, and the yield should be under or close to the return of the NASDAQ 100 or to the fund. So 12%, this definitely you could live off comfortably. JEPQ as well, although JEPQ, you're kind of, they're stock picking. The yield is lower, the return is lower than QDVO, so I give my nod to QDVO. If you want a classic, classic, you're good with 10%. You're gonna get a little bit of capital growth because the NASDAQ has been growing more than 10% annually, right? So of course, if you have 10% yield annually and the NASDAQ grows 15, well, your capital is gonna grow 5%. Right, that year. So GPIQ is really a classic one. I always use it to compare as a benchmark. If you're okay with a little bit less yield, then you absolutely want to see that a little bit more growth in your capital, in your portfolio. This is a good one to consider. Very, very boring one to consider. QQQI is another one that I feel you could live off of comfortably. Spend all the money, your capital will remain the same because it's at a nice, very consistent 14.5% distribution range, right? If you want to, I want the maximum yield, but my capital remain more or less steady, but I don't really care about the growth, but I don't want my capital to fluctuate or go down over time. QQQI is definitely one to consider. So this one is great to live off of. GPIQ, JEPQ, they're all good. QDVO so far because of the yield range is that nice 10 to 14, 15. QQQH, I don't see a point to it unless you really want added protection. I would always go with QQQI instead. QQA is disappointing because these guys are supposed to be the NASDAQ experts. They manage the Qs, but maybe they should stick with, like I always say, indexes. And I don't see a reason for this one because the total return is lower. This one's a bit special. It's a bit unique. I would keep my eye on it. It's a little bit more exotic, but the total returns lately have been really good since inception. Not that great compared to GPIQ. You know what I mean? So if we do, for example, what is it here? TQQY. Since inception, you see that it's not beating GPIQ at all. It hasn't been doing that great. But if we just move up the date to, for example, May 1st, 2025, so the last like 4 or 5 months, you see that it's starting to outperform. So I don't know why. Maybe they changed the strategy. They're getting better at managing it. This is why this one, keep your eye on it. Would I be comfortable recommending it? Well, it's a very, very, very high yield one, which means there's going to have to be, if you're living off of it, some distribution management on your part. You're going to have to reinvest some of the distribution if you're living off of it. But if you're not, this could be one great one on DRIP as a growth ETF, especially if they continue kicking ass. In the 0 DTE space, I think QDTE is still number one right now, but TDAQ is definitely going to be one to consider, I believe, if you want more monthly and more consistent distributions that you don't have to manage. I think QDTE, I personally had this one in my RSP on DRIP, and it was doing really, really well. It was compounding weekly. I really like that. But if you're living off of it, the yield is a little bit too high. You're probably going to reinvest or have to reinvest if you're living off of QDTE, probably approximately half the distribution, right? I would say 15% yield is that magical range. QQQT is okay. Performance-wise, it's okay as well. This could be one that if you really want that 20% annual rate, if you like that, if that floats your boat, this could be one to consider. You know what you're going to get. The yield is very, very consistent as well. Of course, they're going to change the distributions monthly based on that 20%. It's not super, super popular. But in terms of the 0 DTE, I think TDAQ and QDT is your best choice. IQQQ is just, it underperforms. The distributions are all over the place. QDTY could be one to consider as well. Very, very similar to QDT as well. So if you're a YieldMax fan and also like the weekly distributions, higher yield, very, very similar to QDTE, right? So that's it, everyone. Hopefully this gives you an idea of all the great NASDAQ 100 cover call ETFs or income ETFs. Listen, you could live off of all of them or any of them if you have the appropriate distribution management. But if you just want to spend the money and you want your capital to either grow a little bit or remain relatively even, you have to choose the ones that have an approximate 10 to 15, 16% range, right? The ones that have a similar yield to the actual annualized performance of the NASDAQ 100. So that's my opinion on all of them. Make sure to check out the great S&P 500, by the way, if you haven't checked. And if you're American, make sure to check out my US only content. If you just click on the name of my channel, everyone, the best place to find the US only content is clicking on playlists. And I have one playlist called US market content only. This is where I will have all the videos related to the US market. So make sure you follow this playlist if you're American. Also make sure to check the video description, guys. I have the link to my website for the one-on-one coaching sessions, digital product, affiliate links. Everything is there as well. So take care, everyone. And next episode, we're going to do more big caps. So we did S&P, we did NASDAQ 100. Next, we're going to do more just general big caps. So things like JEPQ and Bali and YieldMax and things like that. So see you in the next episode.